David, good morning to you. Looking forward to this one. What do we need to know about Josh?
Josh Friedman was a poor boy, or I wouldn't say poor boy, middle-class upbringing, Boston, went to Harvard, Harvard College, Harvard Business School, Harvard Law School, top of his class every place, Marshall Scholar, degree from Oxford. And then he went to Goldman Sachs with that kind of pedigree. You're not surprised, perhaps. He then went to a place that wasn't as well known as Goldman, then Drexel. And at Drexel, he was there and very, very smart person, but then Drexel imploded. And so when Drexel imploded, he started his own firm with his Harvard Law School roommate, and they built it into a gigantic credit shop called Canyon Partners, which has done it very well. It managed about $26 billion now. A Japanese bank just bought a big stake in it, a Japanese insurance company, and they're in very good shape. They've given spectacular returns to their investors over many years, in credit principally. And he's a very, very smart person, and I had a chance to spend some time with him recently, and I can see why he's done so well. Very, very analytical, very smart, knows the credit business quite well.
It's going to be wonderful to watch. I will be watching, and I can't wait to see it. I'm going to shamelessly switch the topic just slightly, because we've been talking about the Celtics, and we've been talking about how the value is quite high, and the owners are selling it. We don't have Steve on the show, Steve Pagliuca, to really respond to this, but we wanted to ask you, is it sort of peak valuation? Is it time to sell some of these teams?
Well, they've owned that team since 2002, so it's been more than 2 decades, so not surprising to sell after 2 decades. Clearly, they paid a much lower price. I think they paid low $300, mid $300 million for it. Today, I suspect the team is worth $4 to $5 billion, maybe more than that, maybe $5.5 billion. New teams that are going to come into the NBA with no players are probably going to go for $4 to $5 billion. So a team that already has a championship quality team, there probably will go more than $5 billion, I guess. So it's going to be a good payday for those investors. There are many investors who went into it. So after 2 decades, I don't think you can fault somebody for willing to sell their team.
Well, I guess the question is, would you be willing to buy into some of the major league, not just baseball, I know that you did, but some of the valuations that you see out there currently being floated?
I would rather buy at a lower valuation than some of these prices that people are offering today. But, you know, I did pay a fair bit of money for a baseball team. When the Orioles came to Baltimore in 1954, the purchase price was $2.2 million. And we paid, you know, over $1.6 billion. So prices do go up, and there's no evidence of anybody buying sports teams in recent decades losing money on it.
David, this was great. And I will say, just to promote the programme again, looking forward to David's interview with Josh Friedman of Canyon Partners, Bloomberg TV, 9 p.m. Eastern tonight. Do not miss this.